Can we start?
Yes, yes. Put the video on. Put my video on. Yes. All said. Good evening, friends. Today we are going to have a session on decoding your texts from you with you by great speaker C.A. Param Doshi. He is genius. I know him since he is born. Very genius. And he is a great message to all the youth of current era. Obedient, very sincere, build a career. So if you see a Param Doshi is a live example. Wherever he has studied, whatever he has done, he is an all India ranker since childhood. Habit of getting all India rank, even in a tough exam like charter accountancy. And he has done similar achievement in various international exams. And he is one of the proud person of our country. He is also a certified fraud examiner from ACFE USA. He holds a diploma in information system audit and forensic accounting, fraud detection from ICAI, and he is studying ACCA from ACCA UK. And I'm very sure वो भारत का डंगा UK में भी बजा देगा. He is currently practicing as a partner with reputed firm. His grandfather was chartered accountant, his father is a chartered accountant, and entire members in his family are basically a chartered accountant. So he is born in this environment. So I think that nobody understands this subject better than him. So I can have a one full 1 hour session on Param. Okay. So he is such a nice person. So I can take 1 full hour. But today people are not here to listen me. They are here to listen Param. So I request C.A. Param Doshi. We are very much thankful to you for accepting our invitation to be a faculty for Friday evening talk. And without taking much time and without spending much time between you and all the audience, over to C.A. Param Doshi.
Yeah, Deepak bhai, just in between that, in a lighter note, many people today say the same line what you said, કે પરમને તો અમે બહુ નાનપણથી જોતા હતા, પણ we everybody has enjoyed his talent about the whether software IT or whether he's from commerce side since the school side. I enjoy Param since he was in 5th standard. But yes, so my one catch line for you, Param, ઊંડા અંધારેથી પરમ તે જે તું લઈ જા. ITR 4.7 crore, 4.25 crore people are filling, and hope after your program, minimum 100 people will think to pass the message to the right people, and they will share his income via income tax and to the government and enjoy the fruits by the government. Thank you, Param. Please.
Thank you, Deepak sir and Nimil sir, for this wonderful introduction. I think you have actually raised the bar of what will be expected from me. And if, as you said, there are a lot many people, the participants that know me, then I can say one quote which I had read somewhere, that it is difficult to be a prophet in one's own land. So right now I'm actually speaking to people who I think are on my own land, and they know me a lot. So definitely there would be an entirely different expectation. Sir, can you just allow me to share my screen?
Yeah, you just share your screen. Just say
No,
that share.
it has been
Hit the
disabled.
green
So I
button.
think you'll have to enable that.
No, you are the host. Neville bhai.
Okay, I'm not getting an option to share the screen. So please, could you check the settings again?
You will see the
Uh,
green button there, bottom.
yes, but it's saying that,
Yes.
okay, fine. Now I have the option. Now I have the option. Sorry. Okay.
Yeah.
The topic for today says decoding your taxes for you with you. Now, definitely, tax. I am not going to teach taxes over here or calculating taxes, because that is something, as I can say, that we learn for years and still we keep saying that we practice. So, learning how to calculate taxes is not something that we can actually discuss over here, that we can cover here. But what I will try to cover is what are the common types of documents or letters or anything that you will see whenever you're working with your own taxes. So, for example, it can be your income tax returns, it can be Form 26AS, or you might receive some notice or some communication from the department. And for a common person to be able to understand what these documents are, it is very important, because nowadays with digitization and with everything coming online, the income tax department has a lot many sources of information than what it used to be before. So before, it was like if a person had 3 or 4 bank accounts, he would disclose one bank account in the return, others might not be disclosed, and that would work. But now it is not like that. With digitization, with improved KYC norms and everything, the income tax department has a wide source from where it can gather information about you, and therefore it is important for us to know what all information they have and how we should file or structure our income tax returns. Hello, am I audible to everyone?
Yeah.
Yeah.
Yes, yes. You have a
Yeah.
problem with your bandwidth, na? So what you can do is that you can put the video off so that your
Okay,
audio will
I'll
go
turn off
smooth.
my video then. Yeah. Okay, so basically, the journey today, the way we'll go forward with the presentation is, first we'll understand some important terms. I will not spend much time on this, but at least I feel that,
So in that case, what happens that your voice become clear, your screen and the audio. And after some people can see that who the faculty is, the people who joined it.
yeah, after some time I'll start my video for a few moments, so that we don't so that the
Yes.
people
So
can
people
connect
can
with
see
me.
that you speak.
Yes, yes. Okay, so coming back to the journey that I've planned for today, within this 40 to 50 minutes, I will first try to explain a few important terms to you. These are some basic terms, but it is important for you to understand, because one, you will be reading these terms in the documents that we will discuss, and the second, I will be using these terms, so my audience should be able to understand what exactly I mean. So that is the first thing. We'll see a few important terms. The next, which will be the main focus of this presentation, is understanding documents. What all kind of documents are associated with income tax? And third is important compliance requirements. So here we will not be discussing everything, but a few important points which a lot many people would miss out, and therefore it is important that we remember them. Starting with the important terms, first is the concepts of time or the timeline in which income tax is discussed. So there are two types: previous year or financial year, and assessment year. Now there is a joke with chartered accountants and tax professionals that we don't have a new year. We only have a previous year and an assessment year. And these are the terms. So first is the previous year, which commonly we can also understand as the financial year. It starts from April and ends in March. So the financial year is April to March, and this is the year in which we are actually conducting our transactions or business activities. The second year is after that, that is the assessment year. So let's say first year, the financial year is April 19 to March 20. The assessment year will be April 20 to March 21. It is this assessment year in which we go through the entire transactions that we had done in the previous year, that is the financial year, and then we prepare our income tax return, we pay our taxes, and we file our returns. So these are the two important concepts. One is the previous year, which is the actual financial year when the business or the transactions have occurred, and the other is the assessment year, in which the tax calculation and assessment is done. And definitely the third concept is due dates, because there are lots of due dates for compliance. It can be under income tax act, it can be under GST, it can be under many other laws. So the third is the due dates. Now remembering due dates is not entirely your area, because the due dates keep changing according to government notifications. So that is best handled by a consultant. But there are a few important due dates which people should remember. For example, if your accounts are not audited, the due date for filing returns is 31st July. If the accounts are audited, the due date is 30th September, and so on. The second is tax types. So when we say income tax, there is not only one type of tax. There are actually 4 different types of taxes or amounts that you will see. First is advance tax. As the name suggests, advance tax is a tax that you pay in advance. That is in the financial year itself. As we discussed before, there is a financial year when transactions occur, and there is assessment year when you have to pay tax. But what the government wants is that instead of waiting for one full year and then collecting tax from you, they want that you pay at least some part of your tax in advance during the financial year itself. So you have to estimate your liability and pay the advance tax. The second, which a lot many of you would have heard about, is TDS, that is tax deducted at source. So normally this concept is that just as there is an advance tax which you have to pay in advance, sometimes what the government wants is that if you are earning income, there is someone who is paying you that money. So instead of depending only on you, we go to that other person who is paying you money and we take some tax from him. So what will happen is that in the end, when you are calculating taxes, this tax will be, you will get a credit of this tax. But initially they will collect it from the person who is paying you the amount. So for example, TDS will be deducted on salary or on any other payments that you are receiving from your business clients, etc. Third, this is the self-assessment tax. This, as the name suggests, is the actual tax that you are supposed to pay at the time of paying taxes or at the time of filing your return. So the chain goes: advance tax is paid in advance, TDS is again deducted in advance during the financial year, and after deducting all of these taxes, if you have to pay any remaining amount, it is called self-assessment tax. Or if you don't have to pay self-assessment tax, you might be getting a refund. And the fourth is surcharge and cess. So these are a few additional taxes. Like cess is 4% of the tax payable. Surcharge varies on your income. So apart from tax, the government levies certain additional amount from you. Currently, the cess is called as health and education cess. So the government is collecting some additional amount to promote the health programs and educational programs for the common public. So that is why surcharge and cess is levied over and above the tax. Next, and the most important part, this is something that you will see in your income tax return also, the heads of income. So a lot many people have income from various sources. So how do you exactly classify and treat the income in income tax return? How do you know what kind of tax I have to pay, or how I have to calculate the tax on this income? So for that, income is classified into 5 major heads. First, as you can see on the screen, is income from salaries, all kinds of salary income. So you can say in one way that anything that an employer gives to an employee is salary for the purpose of income tax. It can be anything. Next is income from house property. Now, house property here does not only mean house or residential house. It means all kinds of property. The definition is building and all land that is connected to that building. For example, you have a house and you have a compound. you have a building, and you have an attached parking space. So all of this is covered under house property. But if there is an empty plot of freehold land, then that freehold land will not be covered in this head. Third, and the most wide section of the Income Tax Act and of the types of income is profits and gains from business or profession. So now from the name itself, you can understand that when you're covering business and professional income, it has to be very wide. It is probably one of the largest parts of the Income Tax Act. Next is capital gains. Now, under income tax, there are certain assets which are considered as capital assets. For example, that may be shares, there may be some immovable property, building or land. You may have some gold ornaments, or you may have some gold bullion. There are some valuable paintings which can also be covered in capital gains, in capital assets. So whenever you have any gain from selling such assets, it is covered under head capital gains. And last is the residual section, income from other sources. So any income which does not fall under salary, it is not income from property, that is, it is not rent income, it is not your business income, it is not gain on some sale of capital asset, then it falls under income from other sources. The some major incomes covered here are your agricultural income. It includes interest income on fixed deposits, on securities, dividend income, mutual fund income, and also windfall gains. That is, you have won some lottery, you have won some prize in a game show, you have won some 7 crore prize in Kaun Banega Crorepati. All of that is covered under income from other sources. And some of the frequently used terms, this is the last part of the terms that we are discussing. If you have any queries regarding any of these terms, we can visit those terms again before we move on to the next part. So some of the frequently used terms, first is assessee. This is a word which you will read almost everywhere whenever you're reading anything related to income tax. So what exactly is assessee? Assessee means me, you, Reliance Industries Limited, some partnership firm, some temple, some trust, everything. So assessee basically means the person who has to pay tax. So now the next thing that you know is residential status. So normally we believe that there is a resident, there is a non-resident. In income tax, there is a middle line which is called resident but not ordinarily resident. We will not go into technicalities of this because it will probably take around 2 to 3 hours for me to explain you what is a residential status. So we will not go into detail, but basically you will read these words whenever you are reading your income tax computation. So you may be a resident, you may be a non-resident, and you may be not ordinary resident. Again, this resident or non-resident does not have to do with your citizenship or where you are actually staying. The income tax definitions are slightly different, and this residential status is based on those definitions. Or in a gist, we can say that if for 180 days you are in India, you are resident. If not, then you may be non-resident or not ordinary resident. You have to go into the technicalities for that. Third is PAN. Everyone knows this. Everyone has this. Whenever it comes to income tax, we all know one thing, we have a PAN card. So what is PAN? It is a permanent account number. Basically, it is a unique ID for every person, every assessee. In income tax terms, every assessee has a unique PAN. And if by mistake or by chance you have more than one PAN, it is illegal. So in case any of you finds any extra PAN for your own self or any of your organizations or firms, please surrender that at the earliest, because it is illegal to have more than one PAN. And the last is TAN, that is tax deduction and collection account number. You will basically see this TAN whenever you are seeing anything related to TDS. So for example, if your employer or your client has deducted TDS from any of your payments, then in your form 26AS, you will see a TAN. So TAN and PAN are basically different. The reason is not everyone is liable to deduct TDS. Everyone is liable to pay tax, but everyone is not liable to deduct TDS. That is why they have kept a separate PAN and a separate TAN. Now a bonus point, we'll just get away from the topic. If you see a PAN card and you see the PAN number, people say, but it's actually PAN. The fourth letter of that PAN will actually show you what kind of a person or what kind of an assessee that is. Now, if you see, you can see in the slide in the first block that if it is an individual, there will be a P. So for all of you, if you have an individual, your PAN will have the letter P in the fourth place. For an HUF, there will be an H. For partnership form, there will be an F. I think there is a typing error. For partnership form, there will be an F. For a company, it is C. For trust, it is T. So basically, by looking at the PAN, you can identify what kind of a person that PAN belongs to. Is it a natural individual? It's a human, or it is some partnership form, or it is some company, or it is some trust, etc. And you would have heard of the term senior citizen. And so a person above 60 years is senior citizen. They have certain separate limits for tax exemption. And then there is a super senior citizen, which is above the age of 80 years. Coming to the focal point of this topic today, understanding the documents, that is the objective of our today's discussion. So just before we start on this, if anyone has any doubts with the previous terms, please put your questions in the chat box, or you can raise your hand and we'll discuss them before. Again, if any one of you has any point to add or you have any doubts, we can also take them in the middle of the session or at the end as the moderator is comfortable. Understanding documents. So what kind of documents are associated with income tax? I have tried to classify all the documents in 3 blocks: tax information statements, that is statements or documents which contain information about you, which provide you information about your tax related information. Second is income tax returns. So now there I have covered income tax return and audit report and TDS return. Return means whatever information you are submitting to the department. So you can see the contrast. Tax information statements means information that department has about you, and returns means information that you provide to the department. And the third is departmental communication. So this covers all the notices and letters that the department will send to you. This can be, for example, intimation. There might be notices requiring information. There are notices for assessment, and there is a notice of demand. These are the broad categories. We will not go into the details because it is very technical. But basically, just to give you an idea of what kind of documents are associated with income tax, I have made this slide, this classification. First, Form 26A, that is a tax credit statement. This is the first and the most important tax information statement that the department has about you. Basically, this is all the information the department has collected about you during the entire financial year. And at the end of the year, department will tell you that, okay, see, we have this much information about you. Someone has told us that they have paid you 1 lakh rupees of income. You have sold one property. You have made these many transactions. All of that information the department already has. And that is why they provide you with this 26A statement. And from this statement, you can get to know what information department has about you. So basically, this has a very long history. Initially, its purpose, it covered only the TDS amounts. That is, if someone has deducted any tax from your income or your payment, then they are required to provide this information through TDS returns to the government, and government will show it in your 26AS that, okay, this person has paid 1 lakh rupees to you. He has deducted 10,000 rupees as TDS. So you have received 90,000, we have received 10,000, but your income is 1 lakh. So now they will check whether you have shown 1 lakh income in your income tax return or not. Slowly, with technological upgradation and with changes in tax provisions, department has actually widened the scope of this 26AS, and it has become a single tax information statement. Why? We will see in the coming slides what all information department gets about you, and all of this information is contained in this 26AS. So basically, it contains AIRs from banks, that is, banks have provided some information. There might be details of sale and purchase of property. Now, from the current year, from a past few months, there is a correlation, there is an integration of income tax department and GST department. So now, even your GST turnover can be seen in your 26AS statement. So basically, the department is cornering you from all sides that we have all of this information. Now you have no chance not to declare this income. Form 26AS is divided into 9 major parts. We will just see the names of these parts. First, the most basic, almost everyone will have this in their form, details of tax deducted at source, that is TDS. Second covers 3 things. First is TDS on sale of immovable property. So whenever there is a sale of immovable property, the purchaser pays any amount to the seller. From that amount, the purchaser has to deduct tax and pay it to the government as TDS, and the balance amount is given to the seller. Now, this might be just 1% of the total amount paid, but from this 1%, government knows that you have sold a property and you have received this much amount. For example, let's say 50 lakhs or 60 lakh rupees. So now that information is already with the government, and they will show it in your 26AS that okay, this Mr. A has purchased property from you. He has the value of that property or the value of transaction is 60 lakh rupees, and he has paid 1% to us. So now you declare this 60 lakh as capital gain. Next is there are provisions for TDS on rent. So for some, we will not go into we will not discuss the details of this, but in general, for if you are making payment of rent in excess of certain amount, in excess of certain limit, you have to deduct TDS, and this information has to be given to the government. This will be shown in your 26AS. Third is TDS on payment to resident contractors and professionals. Again, this is a new provision which was brought in the last budget. There is a threshold limit. So if you are making payment above that limit, then you are required to deduct tax. So these are TDS provisions, but they are a little bit separate from the general TDS provisions. Next is tax collected at source. Now just like TDS is tax deducted from payment. TCS is tax collected with receipt. So for example, you will see particularly when you are buying a car and the value of that car is more than 10 lakh rupees. So the motor car seller, for example, the showroom owner, the dealer, over and above the price of the car and GST and your road tax and your municipal tax, they will collect an additional TCS. This tax will definitely be available to you as credit when you're filing your return, but that is one live example of TCS which most of us would have seen. And if you have not seen, you can go back and check the invoices and documents. You will see this amount TCS if the price of the car is more than 10 lakh rupees. Third is tax paid other than TDS TCS. What does this cover? This covers your advance tax. As we discussed, you are required to pay certain amount in advance. So part C will cover your advance tax. Then, for example, if you have paid any fees for any appeals or assessment or any other late fees, then those fees will also be shown in part C. Part D is details of paid refund. So if for any previous years, when you have filed return and it shows amount of refund, and if that refund government has paid to you during the current year, then this part D will show the refund and the interest that the government has paid to you. So you must remember this. Income tax department, if you are late in paying your taxes, they will collect interest from you, and if you have paid extra tax, they will pay interest to you along with the refund. So normally there is a time period for calculation, and the rate is like if you have to pay interest to them, you pay 12%. Government pays refund to you, they pay interest at 6%. So this part D, details of paid refund, will show you refund along with the interest that government has paid to you on the refund. E, details of SFT transactions. Now there are certain specified transactions which, for example, banks are required to report, mutual funds, securities market. There's a whole list of these transactions, and it gets updated time and again. But there are certain specified financial transactions, that is what is called SFT transactions. And if any of your transactions fall in this category, then this will be shown in 26AS. Part F again is related to part A2. In A2 we saw that it shows TDS for seller of property. So you have sold. It shows for landlord, means someone has paid rent to you. And if you have received some sum and someone has deducted TDS, that is for the seller or the receiver. Part F is for the giver. So if in the seller statement in part A2, it will show sale of property 60 lakh rupees. So in part F, for the buyer, it will show purchase of property 60 lakh rupees. So in future, income tax department can come and ask you, where did you get this 60 lakh from? Right? So part A2 is for the receiver, part F is for the payer. And part G, TDS defaults. If you have made any default in filing of your TDS returns, it is shown in part G. Part H is the most important for all business persons. After integration of GST and TDS, income tax department, the part H contains details of all of your GSTR 3B returns for the financial year. Month wise, it will show you the return, the date of filing, and the amount of turnover that you have declared. So basically, now income tax department also knows how much sales turnover it should expect in your profit loss account and in your income tax return. So this is the broad classification of 26A statement. If you want, we will also see an example of this statement, and you can see the different tables which are there in the 26A statement. As we discussed before, sources of information. So after this digitization and technological upgradation, income tax department, apart from your TDS, TCS statements, it gathers information from a lot many different sources. First, as we discussed, goods and service tax network, GST. So now the entire GST data is available to the income tax department. When you file your income tax returns, they can cross check your turnover as per Income Tax Act and your turnover as per GST. They can check whether the same matches or not. If it does not match, why it does not match, they can ask you. Next is banks. Banks are one of the major sources of information to the income tax department. Now there is TDS provisions on cash withdrawals. Banks have to furnish information to the income tax department if you are making huge deposits. For example, deposit of more than rupees 2 lakh in cash. Then, as we discussed before, there are certain specified financial transactions, SFT transactions, and high value transactions. So basically, high value covers all of this. SFT, it covers your cash deposits, it covers your huge cash withdrawals, everything. So basically, banks provide a lot of information to the income tax department. Property records. As we discussed, sale and purchase of immovable property, if you are required to deduct TDS, then definitely the TDS deductor is going to provide information to the department. But even apart from that, we see a lot many assessment cases, or we see a lot many information cases where the income tax department will send you an information that, let's say in the year 2014-15, you sold certain property, and they have the details of that property sale, and whether you have filed return. First they will only ask you whether you have filed return or not. If you say yes, then they will tell you that okay, you have filed return, but we cannot see this information about sale or purchase of property. Where is that information? Have you disclosed or not? So property records are also available to the income tax department. Securities market, definitely, if banks are covered, share markets are also covered, share markets, mutual funds. All of this information is regularly provided to the income tax department. Even in your income tax return, now you are required to provide transaction wise details of your shares. So basically, if someone has a lot of trading, they have 400, 500, 4,000 items, 4,000 trades where they have sold shares, they have to provide all of these details in their income tax return. Foreign travel, definitely, if everything is covered, foreign travel is also covered. Also, income tax department normally asks you for a passport number while filing your income tax return, and they have a check on everything. They can get information about foreign travel, they can get information about your visa, your passport details, everything. Purchase of motor cars, as we discussed, there is TCS on purchase of motor cars. Again, there is TCS when you are buying gold in excess of certain amounts. So there is precious metals, other items, motor cars. All of these details are available to the income tax department. So now you know income tax department has eyes and ears everywhere. They get so much of information about you. Basically, what the purpose of this gathering information is that what they want is you declare your income properly, you pay proper taxes, and you are free. Whom does this affect? It affects those who are not paying taxes properly, who are trying to conceal tax, who are trying to adjust their tax liability. So basically, to catch all of these people, income tax department is finding new and new sources of information. There is an, if you know, there is an entire investigation department, a separate investigation department that is basically involved in just gathering information about everyone. This is a separate department. It works independently of all income tax officers. It works independently of this entire system. It has its own system, its own powers, and its own sources of information. So we will just try to see our 26A statement. I hope this my screen is visible to everyone. So this is basically your form 26A. It contains your PAN, name, address. As you can see, there is a financial year here and there is an assessment year here. So financial year is 2019-20, assessment year is 2021. Details are as per your PAN database. Now we go table wise. We will just go through this in a quick recap. First is a part A, details of tax deducted at source. So it contains name, TAN, amount paid, transaction date. And here is section. We will discuss some of the common sections, but section is what defines what kind of income it is. Right? Next is details of tax deducted at source for 15GH. This also we will see. A lot many of you would have heard of these things, 15G and 15H. We will see this. Part A2, as we discussed, on sale of immovable property, TDS on rent of property, and TDS on certain specified payments. Part B, tax collected at source. So basically, if you have purchased a car and the showroom owner, dealer has collected TCS, it will show in this tax collected at source. Next is part C, details of tax paid other than TDS, TCS. So again, there is major head, minor head. You don't need to go into all these details. Basically, this is for systems classification, what kind of tax it is and how much you have paid. Next is details of paid refund. So if any refund has been issued to you, then that will be shown here. Details of SFT transactions, as we discussed, there are specified transactions. Part F, just as part A2 was there for seller, part F is for the buyer.
Param bhai,
Yes, sir.
I think there is a screen is stuck up. You are showing some form, right? Entire
Yes, I'm
form.
showing a PDF form.
The visible is only 24 AS only. 26 AS.
Okay, okay. Just a minute. I'll check. Okay, now is this visible?
Perfect.
Okay,
Nice,
sorry.
perfect.
Sorry. Yeah. So coming back, we'll just take a quick recap. This is a form 26AS, a live form. As we discussed, there are separate tables for everything. So there is part A, details of tax deducted at source. Then there is a part A1, TDS for 15GH, 15G, 15H. We will discuss this in the coming slide. Part A2, details of TDS on sale of immovable property, rent of property, and certain specified payments. Basically, I'm showing you this form so that you can get an idea of where you have to look for what kind of information. And if you get this statement, normally when you're filing your returns, at the end of the year, you will get this statement. So at that time, by looking at the table, you can get to know what kind of information this is. Next is part B, details of tax collected at source. Part C, details of tax paid other than TDS, TCS. So here you will see there is this major head, minor head. All of these numbers are only for system classification, as I discussed before. But it basically shows any tax that you have paid in advance or at the time of filing your returns. Next is details of paid refund. So if any refund has been given to you, then for which year this refund is, assessment year, how it has been given. So by ECS, normally now it is by ECS only. Previously it used to be by check, so check would come in courier or post. What kind of refund it is, whether it is your income tax refund or TDS refund, and the amount and interest. Next is details of specified transactions, as we discussed. Part F, as we saw, part A2 was for seller of property or landlord of the property. Part F is for the buyer of property. or the tenant, that is the person who is paying the rent on that property, the information will be covered in part F. Part G is TDS default. This is applicable only if you are required to file TDS returns. And part H, definitely this is not a business person, this is a salaried person. So part H, details of turnover as per GSTR 3B is not shown here. But this basically contains everything month wise, date of filing GSTR 3B, the turnover you have declared, everything. Okay, so now we will come back to our presentation. Okay, is the screen visible now? The presentation is visible, I hope.
Yes, visible.
Yeah. So as we saw, under TDS, TCS, there are sections, various sections you will see. So your consultant, based on seeing those sections, will tell you what kind of income this is. Now, as a common person, if it is my 26As, I should be able to read what kind of information there is. So I will just brief you with a few commonly found sections, and these will be found in majority everybody's 26As forms. 192, income from salary. So basically, if you see the number 192, it means it is a salary. It is being paid by your employer. 194A, a majority people will see this. This is TDS on interest income. So if you have certain fixed deposits in banks and bank is paying interest to you, whether some banks show the interest even if TDS is not deducted, but basically they're required to show this when they are deducting TDS. So if you see 194A, it is TDS on interest income. 194C, it is for contracts. So if you are a contractor, if you are in the business, you will see this 194C in your 26As. DA, TDS on receipts from life insurance policy. Now, life insurance policy, we will not take this in detail, but basically in life insurance policy from income tax purposes, there are some policies for which you get deduction when you're paying premium, and on maturity, the income is exempt. There are some policies for which you don't get deduction on premium, and when you receive on maturity, the amount is taxable. So if you have taken such some life insurance policy, these may be, for example, there was this trend of single premium policies. So single premium policy would normally not be covered in exemption status, and if when that policy matures, TDS will be deducted in 194 DA. 194G and 194H is for commission income. 194I and IB, as we discussed, it is for rent income. So I is when the rent is paid by business persons. IB is when rent is paid by individuals. For example, if you have a rented house, if you are staying in a rented house and you are paying rent above a certain limit, you have to deduct TDS. So that will be covered in 194 IB. IA, as we discussed, it is on sale of immovable property. 194J is fees for professional or technical services. Again, this is what professional people will see. There will be 194C for contracts and 194J for professional services. 194N is a very interesting provision. This was brought by Budget 2020. TDS on cash withdrawal from bank accounts exceeding rupees 1 crore. Now, two things. One, this 1 crore is during the entire year. So if let's say you withdrew 20 lakh rupees in April, you withdraw another 30 lakh rupees in June, you withdraw another 40 lakh rupees in October, that is 90 lakhs, and in December, you withdraw 30 lakh rupees. So this total amount exceeding 1 crore will be seen during the entire year. Secondly, 1 crore is from all bank accounts of that person. So for example, if I have an account in Bank of Baroda, I have an account in HDFC Bank, and I have an account in Canara Bank, total cash withdrawal from all three banks will be considered when considering this limit of 1 crore. So you have to make sure. So what the government wants is, because they are promoting a cashless economy, they want people to withdraw less cash. And that is why they have approved this TDS on cash withdrawal from bank accounts. Definitely, you will get this TDS credit when you are filing your return, but basically the government is keeping a watch on how much cash you are withdrawing from your account. 195, as we discussed before, There are resident people and there are non-resident for income tax. So 195 is income of non-resident. So if again, one thing you need to take care of is if some person has deducted TDS for you under section 195, then you have to file your return of income as a non-resident. Because if you file return as resident, it will create a mismatch that TDS is deducted as non-resident and person is filing return as resident. That is not allowed. System will throw a mismatch. So basically to avoid this, you need to make sure that if any income is reported in 195, you have to file income as a income tax return as non-resident. And 206C, it is separate. So you see this, there was this entire series of 190 that is for TDS. Almost all of it is covered. We have not covered all sections here. And then there is a 206C, which is for TCS. So basically it can be a motor car purchase, or now if those who are in business would know, there is also TCS on sale of goods, etc. We discussed a lot on 26AS in detail and it took up most of our time. There are other statements also, for example, 15G and 15H. 15G and 15H, when you are submitting, it means that you don't have any taxable income and so you don't want that person to deduct tax on your income, deduct TDS. Now, a lot many people, mostly salaried people, do this a lot, that at the beginning of the year, banks will ask for 15GH form, you file 15GH. At the same time, your employer is deducting tax from your salary. This means that you have taxable income, but you are telling the bank that you don't have taxable income. This is wrong. This is illegal. And you see, a form 15GH is like a declaration. So it's like an affidavit. So basically what you are writing in 15G and 15H is not true, because you have taxable income. You are telling the bank that it is not taxable. That is a conflict, that is illegal, and therefore you should not do. So basically my advice for everyone is, if you have taxable income, if you are filing income tax return, your employer is deducting tax from your salary, please don't file 15G and 15H. The next is 15CA and 15CB. This would basically be for those people who are making any remittance or any payments outside India. So for example, if you are transferring any money to some of your relative or to some other party outside of India, banks will ask for this certificate in 15CA. 16 and 16A. So form 16 and 16A are TDS statements again. When any person is deducting tax from your income, they will give you a certificate in form 16 that yes, I have paid this amount to you and I have deducted this much tax from your income. This information of form 16 should match with your form 26AS. So basically it is an intimation to you that some of your tax has been deducted. And form 60. So basically everyone is required to have PAN, and there are certain places where you are compulsory required to provide your PAN. This can also be for your bank KYC and everything. But basically the requirement for PAN is only for those persons who have to file income tax return. That is, who have taxable income or who have certain specified transactions and they have to file return. What if you don't have PAN? What if you're not required to have PAN and that is why you don't have PAN? In such cases, there is a form 60 which you are required to provide. It is a declaration that you don't have PAN, and still it serves as your KYC, it serves as your identity in place of your PAN. Basically, form 60 is not an alternative to PAN. It is only applicable to those persons who are not required by law to have a PAN. Income tax returns. What we saw till now was the information which the income tax department has about us. Income tax return is a statement that we as assessees are providing to the department that during the last year I have earned this much income, I have made this much expenses which are allowable. At the end, this is my net taxable income. On this, I have to pay this much tax, this much cess, that is your tax payable. Out of that, I have paid X amount as advance tax. Y amount has been deducted as TDS. So you already have that money. So now, after calculating all of this is the balance amount that I have to pay, or this is the balance amount that you have to pay back to me. This entire information, this entire letter is your income tax return. Now there are different ITR forms, but ITR forms now is more technical because most tax professionals and consultants use softwares. So based on the information, software will decide what kind of form is to be filed. Software will upload the form. But definitely, as a professional, we need to have an idea what these forms say. As a common person, as a return filer, you don't need this information. Now, there are different forms or papers or documents that you will see in an income tax return. So whenever someone asks you for your income tax return, you should know what document they want. First is the ITR acknowledgement. So it can be an electronically signed acknowledgement or ITRV. That is a single page return that you get when you file your income tax return. There is a single page which contains your name, details of income, and the verification block. That single page is your ITR acknowledgement. That is what people normally refer to as an income tax return, but that is not the complete return. That is only the acknowledgement that you have filed this return. Next is the income tax return form. This is something that we don't see. Normally, nobody uses this until like professionals use this, but that is when income tax department has some cases against you or assessment that is, or if there is some mistake in the income tax return or it is a defective return, then we see this form. This form can range from 15 pages to even 51, 55, and 60 pages in some cases when you take big companies or trusts and everything. So that is the entire income tax return form. That is the actual income tax return. You don't need it, and therefore you don't keep it. Third is a computation. All of the information conveyed in the income tax return has to be kept somewhere in a manner that a common person can understand. If I am filing a return, I should be able to understand what information is provided and how the calculation is made. So income tax return computation is basically a common person's layman language calculation of your income tax liability. This computation is not what is submitted to the department. The format of that is different. An ITR XML, if any of you is from the technical background, you will know what an XML stands for. So XML is basically the form in which information is given or sent to the income tax department. All of these papers that you see that are for the user or for human reading, XML is for the department system reading. Now, for income tax return after filing has to be verified. There are three options available these days. First is physically signing the document acknowledgement. Most of you will have done this at some point of time or the other. Second is an Aadhaar OTP or Aadhaar EVC. So this is a very convenient mode which has been provided by the government. You get an SMS, you get a 6-digit OTP, you enter it on the department website, your return is verified. Now the benefit of this is with introduction of Aadhaar OTP and electronic verification, department has started for faster return processing. A lot many of you would have seen that you filed your returns in, let's say, August or September, you will already have received your refund by now. This process used to take months before, but from this year, the department has upgraded their system. And if your return is e-verified, now e-verification is on the same day. So if your return is e-verified, it gets processed faster. But if you are physically signing the acknowledgement, it has to be sent to Bangalore by speed post. So it reaches there. Then they take an entire batch of those documents. They scan the verification barcode. After that, it is recognized as verified, and then it goes for processing. So you see there's this entire time gap of signing and sending to Bangalore and it getting scanned versus a 10-minute 6 digits OTP which you can enter and your return is verified. And third is digital signature certificate. Now digital signature certificate is, it comes like a small token, USB token. This is not compulsory for everyone, but companies, partnership firms, those who require audit, and in certain special cases, digital signature certificate is required. So you can also verify using that. That is again an e-verification mode. Parts of a computation, as we discussed before, a computation is for a layman's understanding of what information is being given to the department. So any computation, it can be generated from any software. You will see there are certain basic, this is a certain structure of the computation. And this is the same structure in which the income tax return form, the entire 15 and 51 page form that I said is covered. So first is your permanent information. Then there will be details of income under each head that we discussed. There are 5 heads of income. So the details, the calculation, what amount is taxable, what amount is exempted, what amount is allowed as deduction, all of the detail will be covered in head of income. Details of deductions from total income. Now you all would have heard ATC. So what exactly is ATC? ATC is where the government, the Income Tax Act, provides you certain amount, certain expenses which they will allow as a deduction from your taxable income. So basically it covers your life insurance premium, education, that is tuition fees of children, certain specified mutual funds, fixed deposits, etc. Then other deductions include Mediclaim premium, etc. So basically, what the government wants is that every person should have a life insurance premium. They should have medical insurance to come to tide over medical emergencies and all. Now that is a basic need, and everyone will invest in that. The government wants you to invest in that, and that is why they are providing deductions from total income. Now, definitely, if some of you are conversant with the budget, there is this entire new scheme where these deductions are not allowed. But basically, for all of those people who already have life insurance policies or who are already paying Mediclaim premium, then as a professional advice, normally as a professional opinion, not an advice, I cannot give an advice, but normally as an opinion, it is better to stick to this scheme because it creates a saving habit. That is why, that is the main purpose why government is providing these deductions. Next is the calculation of tax liability. Now this is something which hardly anyone will understand, but and you don't need to really try to understand how the tax is calculated because there is an entire system, and basically I can say that people spend years studying that, so it is not possible to even describe it right now. But this basically tax liability is the actual amount of tax that you are required to pay. On that tax, there is certain interest which is charged by the department, or there may be certain late fees that you have to pay. Now, whenever you see interest, you will see these numbers 234A, 234B, 234C, and 234F. What exactly is this? This you need to understand. 234A is when you are filing your return late, that is filing return after due date. For example, normally the due date is 31st July. So if you are filing your return after 31st July, government department will charge interest on the tax that you have to pay. Next is 234B, which says short payment of advance tax, where advance tax is paid is less than 90% of total tax. So how is this levied? Basically, as we discussed before, the government wants that why should we wait for one full year for you to pay us tax? No, you start paying tax in advance. You estimate your amount. So basically, you have earned 10 lakh rupees last year. So now you know that yes, this year also I'm going to earn 10 lakhs. On 10 lakhs, I have to pay, let's say, rupees 2 lakhs as tax. So what you do is you start paying tax in advance during the year itself. In the later, we will give you credit of that tax, but you start paying tax in advance. Initially, it started as an advance tax. So now what they want is you pay at least 90% of your tax in advance. If you're not paying that, then we will charge interest on that, and that interest it starts from the first day of April itself, right? So that is why advance tax is so important. That is why government has so many government gives you so much of advertisement at the end of every quarter that please pay your advance tax in time. Third is 234C, payment of installments of advance tax. So now even in advance tax, the government wants that if you divide the whole year into 4 quarters, then you have to pay a certain percentage of your tax within that quarter. So let's say there is 15%, that is 60%, that is 90%, etc. I just said arbitrary figures. The percentage are different. So basically, you are required to pay at least that much amount in advance, quarter wise. And if you don't pay this, then for the remaining period of the year, they will charge an additional interest under 234C. Last 234F, it has come from about 1 or 2 years. This is late filing fee. So basically, what it provides is that if you're filing return after due date, one, you have to pay interest under 234A. Also, you have to pay a flat fee of 234F. So basically, if your income is below 5 lakh, there is a flat fee of 1000 rupees. If your taxable income is above 5 lakh and you're filing the return of income late, you have to pay a flat 5000 rupees fee, and 5000 is only up to 31st December. If you are filing your return after 31st December, the flat fee is 10,000 rupees. under 234F. You may have any income, you may have loss, you are filing a return of income late, you have to pay a fee of rupees 10,000 after 31st December. So what we discussed before is what tax you have to pay, what interest and fees you have to pay. Now next, what tax you have actually paid. You will have paid advance tax. There will be TDS deducted from you, from your amount. There will be self-assessment tax that you have paid. All of this tax will be deducted from your tax payable, and thereafter you will get the net amount of tax. The remaining sections are for normally for business people. So details of depreciation. Again, if you have a business, mostly business people will be knowing about depreciation. So depreciation, if you have any losses which you have incurred in the previous year, the department allows you to carry forward those losses. So that set of details will be provided in this part. Next is details of TDS TCS. So as we saw in 26AS, there is this entire breakup. Which person is paid, what is their TAN, how much amount they have paid, how much TDS they have deducted. That entire information will also be shown in your income tax computation. And the last we discussed, there is GST turnover which is covered in form 26AS. That GST turnover details will also be seen in your income tax return computation. So basically the computation is mirroring the entire income tax return which you are submitting to the department. All of that information is shown in the computation, but it is in a user-friendly format so that anyone reading it can understand. Last is details of bank accounts held by the assessee. The income tax department wants that you disclose the details of bank accounts, your bank account number, your IFSC code, your MICR code, along with your income tax return. Till now, people used to disclose one or two bank accounts, but now they have made it compulsory that you are required to disclose all bank accounts that you have with the income tax department in your income tax return, right? So basically these are the parts of an income tax return computation. I think if time permits, we can see a computation if you wish, but we seem to be running short of time, so I'll skip on that. But this is the entire part. So what I would have shown you would be a common plain text form. Departmental communication. This is the last and most important point that we will see. After that, we will see a few basic compliances, but that we'll only discuss in a gist. So what kind of communication you normally receive from the income tax department? One, reminders from the department. File your income tax return in time. Pay your advance taxes in time, etc. E-verify your returns. These kind of emails keep coming constantly, and there will always be this line, ignore if already filed. So basically, the government is trying to provide to create awareness that people do their compliance in time, and that is why they send these reminders. Next, most important, intimation under section 143(1). Basically, any person who receives this will believe that they have received a notice from the department. What will happen after this notice? But no, whenever you see these numbers 143 into brackets 1, it is just an intimation that the return that you have submitted has been processed. I will show you. Yes, I think you can see this is the latest intimation of this current year which has been received. This intimation under 143(1) means your return has been processed. Your income tax return has been successfully processed. Now they have made this format a lot better. This is more user friendly. Earlier it used to look just like an income tax notice. And in this intimation, they will provide you this entire detail. What information you have declared in your return and what information the income tax department has as computed under section 143(1). There will be an entire comparative table, income details, tax details, interest and fee, how much amount you have paid, prepaid tax, and refund details. Now definitely this goes into 5 pages. We will not go through all of these pages, but you can see there is an entire detailed comparison. So whenever you see this kind of a document, you see a comparison and you see 143 into brackets 1. Don't panic. It is only an information, an intimation that your return has been processed. At the end, in the last, you can see whether there is any refund or whether there is any amount payable. You will also see if the department has adjusted your refund against any previous demand. The department also does that. And so basically 143.1 is not something to panic. It is just something to read. You read that, you see whether the return that you have sent and return that they are calculating is the same. If it is not the same, or if there is some mistake, you can always file a rectification. There is a 30-day time, so you need to make sure that you file it within 30 days. Right? Coming back to the presentation, as we discussed, there is this intimation under 143.1. Now, except 143.1, all other documents will have the words notice, and U/S means under section. So everything else is a notice. So basically, when you receive this, it means the department wants you to do something or wants some information from you. You should consult your professional or a consultant whenever you receive any of the notices, but not for 143.1. 143.1, if there is any mistake or difference, only then you're required to pay attention to it. And last, I won't take much time, but some of the important compliance requirements, some of the do's and don'ts we'll see. First, this has been going on since last almost 3 years now. Linking PAN and Aadhaar number, this is mandatory. Now, PAN and Aadhaar might not get linked because of certain reasons. For example, there is a difference in name or there is a difference in date of birth. You have to get that rectified and you have to get it linked. Next, this is the most important point that I would like to stress on: pre-validate your bank account. Income tax department has started this system where you have to pre-validate your bank account. That is, in your bank, you have to get your PAN linked with your bank account number. In the income tax department system, you have to link your bank account number with your PAN. The reason for this is now most of the refund is given to you by ECS. They directly deposit in your bank, and that is why they want that your bank account number and PAN should be properly linked. They should be properly validated so that wrong refund is not given to the wrong account, right? Now they have started with the system since last year that if you have not pre-validated your bank account, your refund will be held. Your refund will be blocked. They will not pay you the refund until you pre-validate the account, right? So you might have to visit your bank to check if your PAN card is linked with your bank account number, and you have to visit your consultant, or if you log into the income tax website on your own, you can go and pre-validate your bank account over there. Third is purchase of immovable property. Whenever you are purchasing any immovable property, especially the limit right now is above 50 lakh rupees. So, and you are paying amount more than 50 lakh rupees. Please make sure that you deduct proper TDS and you file proper TDS return. This sale and purchase of property is a special case where you don't need a TAN number for paying TDS. You can do it using your own PAN. But please don't forget to do this, because even if you fail to do this TDS, the department is going to have information about your purchase of property. It can ask you questions where you got the funds from, but apart from that, you will be in a default for not filing TDS return. So whenever you're purchasing any property, please make sure that you visit your consultant regarding this TDS amount, and that too, it is better if you do that before completing the purchase formalities. Next is capital gains on sale of property. If you are selling any property, please don't forget to provide those details to your consultant, calculate proper capital gains and pay tax on it, because if you don't, the department is still going to have information. And basically, I'm not trying to scare anyone, but what we should do as good citizens, as responsible citizens, is that we should make all of our compliance in time, so that in future nobody gets a chance to find faults with us. And last is declare income in correspondence with form 26A. This is very important, because as I said, the department has a lot many sources of information. They have a lot of information about your income, and if there is any mismatch, then it will first be reflected in your intimation in 143.1. If there is any mismatch, the department is always going to collect that amount, that additional amount of tax from you on your income. Yes, if you have shown more income than 26 years, not a problem. But if you have shown less income than 26 years, department is going to come back to you, why you have not shown that income. This also brings one more point. that whenever you get your 26 AS at the end of the year, normally it is available from the end of June to July onwards. Please make sure that you check that all income in 26 AS is your income or not. Sometimes it might happen that while filing TDS returns, there may be a mistake in PAN, or some wrong person's PAN might have been feeded by that person. It might be possible someone else's income is shown in your account. You have to make sure you get back to the person who has deducted your tax and you get the TDS statement rectified, because if that is not rectified, you will be required to show that income and you will be required to pay that tax. Department is not going to know whether this is your income or not. They have information that it is your income, so you are required to declare it, right? So these are some of the important points which you should take care of, and some of the don'ts. As we discussed, as responsible citizens, we don't want to get in fault, and therefore we should make sure that we don't give the department any chance of getting back at us. One is excessive cash withdrawals. As we saw, there is now a TDS provision. If you are withdrawing too much of cash, department will come back, will try to trace that if you have withdrawn the cash, where have you used it, to whom have you paid, whether the cash has been paid for any unaccounted transactions or not. That is why you should keep a check on your cash withdrawals and cash deposits. Falsity or omission of accounting entries. This is a new provision which has been brought by the last year's budget. If in any of your accounts any false entry is found, or if any entry is omitted, then every person who is connected to that entry, so it will be you yourself, your accountant, your chartered accountant, the other person, for example, if it's a purchase or sale, then the buyer or seller, all of you will be covered in this entire net of the income tax department. And there is a provision of an equal amount of penalty. So for example, if you're not showing some sale, there are normal penalty provisions of undisclosed income. There you have to pay 60% penalty. Plus, if it is a 50 lakh rupees transaction, you have to pay a full 50 lakhs as a penalty if you don't show it. So falsity or omission of accounting entries is a very serious matter now. So you must take care that all of your accounts are properly maintained. Third is ignoring departmental communication. A lot many people do this. They have received some notice, they just discard it, they just ignore it. Never do that. Even with 143.1, as I said, whenever you receive, first go through it, read it. If everything is fine, then it's all good. If there is some difference, you apply for rectification. If there is some difference, you see whether you are in fault, whether department is in fault. That is only intimation. But if there is any notice apart from that, please remember there are always time limits for responding to those notices. And if you don't, you will be in a default. So never ignore any communication from the income tax department. Next is, as we discussed, 15G and 15H form. If you have any taxable income, if your employer is deducting TDS on your salary, please don't file 15G and 15H, because 15G and 15H is a declaration and affidavit, and wrong filing of 15G and 15H can lead to legal consequences also. And last, and the most common point, I don't need to say this, if everyone is attending, for all those who are attending this seminar, they are only attending because they want to understand the ITR compliances. So make sure that you don't forget to file or verify your ITRs. Remember, ITR verification, you have to verify that within 120 days, that is 4 months from filing. If you forget that, your return will be considered as invalid. So don't fail to file or verify your ITR, because the government will have a track of how many returns you have filed and how many returns you have forgotten. They will ask you for information. You will have to file compliance. And if, let's say, if that information is asked 4 years or 5 years down the line, you might not even remember. So instead, complete your compliance in time, file your returns properly, disclose proper income. If you do everything well, you will always be safe and sound. So I think that is all from my side. I'd like to ask the moderator to, if there is any question, if there are any questions that the participants wish to ask, we can have an open forum now.
There is one question from Udamji. In case of NRI, what is the limit of IT return And in case of rent income, etc., about 1 lakh, is it required to file IT return?
Yes. So filing of IT return is required.
No,
Now
even
again
if the
for
rent income is about 1 lakh, not
yes,
very
but
high.
again there are different limits for residents as well as non-residents. But still, definitely there is this basic exemption limit of 2,50,000. So if 1 lakh rent is there, then probably normally you might not be required to file the return of income. But again, it depends on whether TDS is deducted. If the payer has deducted tax from the income, then definitely you are required to file return because you have to get the refund of that TDS.
See, so in case of NRI, what is the limit of IT return?
Again, it is the normal limits as that is for all individuals. 2,50,000 rupees is the basic exemption limit. Same is applicable to NRIs. Now, for resident people, for senior citizens, it is 3 lakh. For super senior citizens, it is 5 lakh. But this 3 lakh and 5 lakh is not applicable to non-residents. For non-residents, it is only 2,50,000.
What is the rule for the payment of advance tax for senior citizens?
Senior citizen advance tax payment basically depends on what kind of income you have. So now if it is a retired senior citizen, if you are getting pension income or you have interest on fixed deposits, then you are not normally required to file this income tax, not required to pay advance tax. Definitely, if you are still into, if you are conducting business income, yes, you are required to pay advance tax. For pension income or for any income on which TDS is deducted already, pension, salary, or interest on fixed deposits, then you are not normally required to pay advance tax because that is already covered under the TDS provisions.
So same person is asking, suppose he is selling some shares.
Okay. So basically, share
What
selling.
is the advance tax in that case?
Yeah. So again, advance tax provisions are subjective. When it comes to share selling is basically covered under capital gains if it is as an investment activity. And in capital gains, there is a general rule that you have to pay advance tax after that gain occurs to you. Now, share selling is actually a continuous business. You cannot normally always estimate the amount of income tax which you will be required to pay, or the taxable capital gain you have. So basically, in share selling, you are not required to calculate advance tax because it is not practically possible. You pay whatever tax you have to pay at the end of the year based on the capital gains calculation.
Any other questions? I think
Yeah, 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 Deepak bhai.
CA
There is
Param
one
Doshi,
question.
thank you very much for delivering an excellent talk. Normally, what happens when the
Deepak
people
bhai,
shoot out of the panel? Yes. Yeah, what is Form 12BB?
Okay. Could you just tell me in what context you are asking? I mean, Form 12BB. Because
Mr.
definitely,
Rajiv.
no, I mean, the person is asking the question. So what exactly is the reference with respect to which they are asking about Form 12BB?
No, no. So what I'm requesting the people, since it is almost 8 o'clock, so I'm requesting participants to give that questions to me. I'll get you one answer. Okay. So whatever questions you have, you get back to us, and we'll forward to CA Param Doshi,
Yeah,
and
okay. Just a
we'll
minute.
answer it.
With respect to this Form 12BB, I believe Mr. Raji, yes, is a salaried person.
No, no. His employer has asked to submit the investment proof again along with 12BB.
Yes, so Form 12BB is basically a declaration. As we discussed, there is ATC and ATD or other deductions which you can claim. For example, your life insurance premium, your mediclaim premium, tuition fees, etc. So Form 12BB is just a format in which you are required to declare that amount. It is a declaration you are providing to your employer. Now, the reason for this is I'd like to explain a bit in detail. Whenever TDS is calculated on salary, it is calculated as if you are filing the return. On all other incomes, there is a flat percentage, for example, 10%, 1%, 5%, etc. but that is not applicable to salary. So in salary, your employer has to make this entire calculation of your how much tax you have to pay and then divide it into 12 parts. So for the purpose of making this calculation, they will ask you whether you are paying any life insurance premium or medical premium or tuition fees, of which you will get deduction. Now, the employer is not going to have actual information of whether you will pay or not. And if the employer has not deducted proper tax, they will get a notice for short deduction of tax. So instead, they are taking this declaration from you in form 12BB that I have this much amount of deductions which I have to claim, and that is why you should calculate less tax on my income. So that is form 12BB. It is a declaration from employee to the employer.
There is a last question from Mr.
Yes.
Paresh Shukla. What is the percentage penalty for under 20 234B
and
and
234C?
234C?
Yes. So the penalty percentage rate is 1% per month, or in common, or you can understand as 12% a year. That is the rate for 234A, 234B, and 234C. For all these interest sections, calculation periods are different. So, for example, 234C will be quarter wise. 234B will start from 1st of April. 234A is if you're late in filing your return of income. But the percentage of interest is 1% per month. That is how it is specified in the Act. Generally, we can understand 12% per year.
So I think that this completes all the questions. Thank you very much, CA Param Doshi, for being with us at Baroda Management Association. A lot of people know you. Madam Sarita Sinha also has said all the best, and she has welcomed you to Baroda Management Association. And I believe that you were the student when she was with some training institute, ICFAI or something.
Yeah, ICAI.
So yeah.
But I would like to say that actually it is a privilege for me to be able to speak at Baroda Management Association. And I would really like to thank the entire managing committee and BMA for providing me this opportunity to be able to present at least something. I believe that a lot many people would be knowing a lot of what I said, but if there is at least one new thing that you can take away from me today, then I think my session is successful.
See, your session was so good. Normally, what I have seen that any faculty who spread the talk beyond 7:30, then suddenly there is a drop in the participants attending the program. You are so much good, and people were so much engrossed. People have forgotten to see the time. I only realized when you say that the time is running out. In fact, I was not knowing that it is already 7:30 or 7:35. So you are really too good. And within 1 hour, I think you have covered the entire thing about what normally a person is required to know, whether it's a businessman, senior citizen, or an individual salary person. So it is just not possible to cover in 1 hour. And I think you have done excellent job. And thank you very much for coming to Baroda Management Association Friday evening talk. And I think that we want you to be more active with Baroda Management Association. Over to Nimil Bhai to say about the future programs that we are going to have.
Thank you, Deepak bhai. Congratulations once again, Param. First time I enjoyed the Param at I think Baroda High School Hall or Lions Hall. I don't know the venue, but that's the program, jam-packed auditorium, and Param is handling the PowerPoint presentation. When I asked his parents what Param is doing, standard 5 class student, she told me, his mother Alka, Param has designed this PowerPoint presentation. He is handling every time whenever I doing the training program, and I can see today's beauty of your or smart work in education side. You are not you ranker from commerce students, but also in the presentation side, Deepak bhai, believe me, I have attended more than this is something 292 talk show and Friday evening talk show I attended at BMA. Param, rare case, I appreciate the presentation part. Fantastic presentation, perfect point, bullets, and everything is perfect. None, yes. And with the permission of chairman, let us hope that we will invite you one more time. But not on the gist kind of topic. It's a
Yes.
challenging task and complex kind of topic for accounting side. There are many complex topics are there, and we
Yeah.
need your help for
So
to
we can
complete
have
that
a
kind of
management
program.
development program from Param, maybe a one-day workshop for
Nice.
all the
Yeah,
professionals. Very true.
yeah, definitely. Now,
Yes.
yeah, something about the future program. BMS line up with the series of program for January, February, and March. Month of this month only. On the 23rd of January, we are organizing RTC Roundtable Conference on the digital program. It's a digital RTC, and subjects and detail everything will be declared in the next program. One more program very popular in the Gujarat and the national level, that is AAYOM, Annual Outstanding Young Manager Achievement Awards. That's coming up in the month of the February, 16, 17, 18, the 3 days we have blocked. And again in the March, one more RTC that is relevant to the RTC CXO. That is the CXO specifically programs we have planned. Apart from this, yes, IMYI, that is also that igniting mind of young India. And this time it's chaired by the very popular person in our own city, RJ Shiti, is a part of managing committee members. So, Param, I am well in advance. I'm inviting you and open invitation to you to join the BMA on the longer plan, not only as a speaker or one day guest. Yes, you will be there because BMA need this your kind of personality for the future program. And apart from this, yes, series of Friday evening talk we have lined up. Deepak bhai, thanks a lot that your hard work I can see now. One Friday evening talk next week is very important, and that is something about the one of the most complex situation in day-to-day life when we receive the GB bill. We don't know the how electricity will calculate it. Billing will be there. How we can save the lights with the, whether we should use the light for 20 hours instead of 20 or 4 hours, or we can how we can this bill is calculating, so you can save the money in this part. It's a very complex subject, and we have invited a very senior person from MGVCL who is the part of this committee. One more on the digital marketing side. So this time we are covering with the WhatsApp marketing, very important factor. Every day morning we are getting the bunch of good morning and good evening full patte, but very important part for the business is also today. So we have invited very prominent and young dynamic speaker for the same. So thank you, Vasabha. At the same time, I humble request to please take a screenshot of this slide. You will get everything about the BMA helpline, whether it's with the mail, WhatsApp, Facebook, what's a Twitter, location, address, or YouTube channel, Instagram, anything you want. Everything is there in this slide. So, and at the same time, yes, with permission to the permission of the speaker, Param,
Yes,
this
sir.
program is right now live streaming on the YouTube, and it will be there on the YouTube channel for some point of time, because many times we are receiving mitha complaints from the people that we have lost, missed the bus because of some glitch in the network or some network issue. So that's the reason we have started this YouTube live streaming, and we are receiving fantastic response from the same. Thank you, Chairman. Yeah, Deepak bhai,
Thank you,
please.
CA Param Doshi, for being with us, and we want you to be with us for a longer time, and we want maybe one more time to conduct some management development program. That will be a paid program, maybe a one-day workshop, and it will be for the professionals. So
Sure,
thank
sir.
you very much
Thank you.
for being with us, and with this, we end this program. Thank you.
Thank you very much, everyone, for being